Tuesday, June 16th, 2020, Monaco 64, home of alternative economics and contrarian views. So when money is no object, money becomes worthless. If you can spend money and conjure up fiat currency, because that's what it really is. It's not really money technically, but for the title of this video, I'll leave it at money. But we all know, all the people that follow me, but when you conjure up fiat currency out of thin air, backed by a debt that will probably never be paid, that currency or money becomes worthless. Yes, it hasn't happened yet, but it has been happening since 1971 gradually, and I think we're going to see an acceleration of that. And that will be, of course, reflected in the prices of gold and silver versus all this fiat currency that has been conjured up out of thin air. That will mean a total loss of confidence in the currency, be it the Federal Reserve note, be it the euro, the Bank of England note, the Bank of Japan note, all fiat currencies. There's no country out there that's going to be immune to this madness that we have right now. It's hard, of course, to stay on the right track, of course, of not playing this game. Amazing, of course, yesterday we saw the markets correcting lower. We were down about 1,000 points when I made my video, and we ended up closing up 158 points. The Dow, S&P ended up closing above 3,000 and up 25 points. So there's no markets as well. I guess we look at the markets every morning here. I tell you where the markets are. But so if money is no object either, you can control the markets. You can put the markets wherever you want. But there will be a moment when investors realize that the money is worth nothing. If it was so easy to spend and keep markets where you want them, we'd never have business cycles. We'd never have poverty. We never have social strife like we're having now. It's a crazy world. Of course, these people in charge, the same people that are in charge of the World Economic Forum, even President Trump is involved in this. I will get thumbs down for this, of course, but the president is working with the Federal Reserve, despite the fact that people think the Federal Reserve is working against the president. I mean, so what's happened overnight to get markets higher yesterday and also up this morning? Well, first you had the Fed announce something that they had already announced, but they hadn't really put into practice. The markets knew about this, but they took this as an advantage to goose everything up. The story was stocks soar into green after Fed announces it will start buying broad portfolio of corporate bonds. Well, that had already been announced. It's just that they hadn't really started buying. So it was kind of news, but also old news, because the markets knew that the Fed was coming in. I guess the only difference from prior to yesterday was that the Fed did not need to use this program because the market was doing the job for itself. The market was buying all these corporate bonds because they knew the Fed would be right behind them. And I guess I assume the Fed saw that things were getting a little bit difficult for the market. So they decided to come out yesterday and tell the market, hey, don't worry, we're going to buy all these secondary market corporate credit facility. What does that mean? Well, they're going to go into the secondary market. Secondary market is a market where investors are trading bonds that have been issued in the past amongst each other. So corporate bond holders, and it's got nothing to do with the general public. We know that 10% of Americans own 85% of the stock market. I would say the corporate bond is even more, how can I say, refined. It's even more wealthy people that own corporate bonds. Most people don't even know what a corporate bond is, I would say. I guess some of the pension funds hold corporate bonds, so it would help people who have 401ks. But the amazing thing, if you look at the Fed's announcement, it says effective June 15th, 2020. So they came out with an announcement. And I went to read through it, and I was surprised about the leverage. So even the Federal Reserve is using leverage. Why are they doing that? Well, I think it's because the trillions that they're pumping into the system of currency is not enough. Maybe they don't want to spook investors, or maybe it's just the way the system is. You need always leverage in this fiat currency system. So it says here the facility will leverage the treasury equity at 10 to 1 when acquiring corporate bonds of issuers that are investment grade at the time of purchase, and when acquiring ETFs whose primary investment objectives exposure to U.S. investment grade corporate bonds. The facility will leverage its equity at 7 to 1 when acquiring corporate bonds of issuers that are rated below investment grade. So that's junk bonds are only going to be leveraged 7 to 1. So mad world. So before I go into the overnight news about even more money, I just wanted to point you out to a really good article about who's behind all this central banking largesse. And you won't be surprised, it's Blackrock. Blackrock is actually helping the Federal Reserve and the U.S. Treasury with all this. They're a fund manager, and they were given this contract, and there was no competition to see if other fund managers would do a better job. They were just given the contract. Of course, the CEO of Blackrock is Lawrence Fink, or Larry Fink. He is on the board of trustees of the World Economic Forum. We've also got Christine Lagarde on that board. We've got Mark Carney, who until the 16th of March or 17th of March was the governor of the Bank of England. We've got the managing director of the IMF, Constantina. Well, I forgot her name. I think she's Romanian, or Bulgarian. These are the kind of people that are conducting not only monetary policy, but fiscal policy. They're advising everyone. So I highly recommend you read this article. It just goes to show that for those of you who think there's a plan out there that the general public is going to be saved, I think you need to think again. Read, follow the money, or in this case, the trash fiat currency, because that's what it's going to become. And apparently these people were planning these programs last summer, towards the end of last summer. So it's been something that has been planned in advance. The title of the article is BlackRock authored the bailout plan before there was a crisis. Now it's been hired by 3 central banks to implement the plan. So it's not only the Federal Reserve. It's a huge conflict of interest. A fund manager who holds corporate bonds, who holds stocks. Well, that's the next step they're advising central banks to do, to buy stocks or equity. And they also talk about the fact that young people need to be encouraged to create a culture of buying stocks, not only in the US, but particularly in Europe, you will see. And I'm going to put a link below in the description to a video about all these new trading platforms. I think in the US it's called Robinhood. Here in the UK we've got it as well, but we also got Trading 212. They're pushing people to buy fractions of shares to put their money into this crazy market. Well, it's not really a market. So this is all part of this. So I'll put it down in the description and up in the cards. It's by a guy called Kevin. It's a long video. It's about 30 minutes, but I highly recommend you watch it. Very interesting about what's going on in the stock market. And you will probably agree with me that it probably end in tears. But I think right now we can see that the powers that be don't want the markets to go down. The powers that be are doing anything with this money that has no object or fiat currency to keep things going. Will investors play the game? Well, that's what they hope. And everything's possible. Yeah, we could go make new highs in the S&P and the Dow. But I would say that would be hyperinflationary, just like what happened in Germany. If you held shares of companies that had a business that made sense, that had hard assets, you did fairly well, even though the best place to have been, of course, was in foreign currencies. Why foreign currencies? Well, because the foreign currencies in 1923 were still gold and silver, while the Reichsmark became money with no object. So it's up to the individual to do their homework. I know it's frustrating because gold and silver didn't do well yesterday. They actually went down on the back of the stock market going down. And then when the Fed announced this new plan, yeah, precious metals did rebound, but they were still below where they were last Friday. I think the key word here is patience, and I'm sure some of you have the patience, but the majority of people have no clue what gold and silver signify and what's going on right now. And I get comments, of course. Someone commented yesterday, you're not laughing now, the Dow is down only 150. Keep your savings in Federal Reserve notes. Keep your savings in these, well, they're not even markets. So what about what happened overnight? Well, we've got another announcement that has been brought out again for a second time. It's a little bit like when they're doing the trade negotiations, right? They kept coming out with new phases, or everything's okay, we just need a signature. Well, overnight stocks soar on report Trump planning $1 trillion infrastructure stimulus. So Zero Hedge says 10 days ago, stocks soared on talk of a $1 trillion fiscal stimulus being mulled by the Trump administration. And I guess this time they left the fiscal out of it and used the infrastructure. Why do they do that? Well, because it didn't go anywhere, the fiscal, because it needs help from the Democrats to pass that in Congress. So by using infrastructure, President Trump is hoping that it will be difficult for the Democrats to oppose that politically, because it's for the good of the country, right? Another $1 trillion for infrastructure. So there's another $1 trillion. We don't know if that's going to go through, though. We already had President Trump sign $6 trillion into law, and he was very proud of putting his signature on it. The thing people forget is that, yeah, it's going to help the economy, of course, if you pump all that funny money into it, or currency that has no object, that money is no object, right? Yeah, things are going to be good for a while. It's like a drug addict who takes his daily dosage. Yeah, he's gonna, or she, they're gonna be in a good mood, but after a few minutes, they're gonna need more of that. And the more addicted the economy becomes, the more of these trillions it's gonna need. So money is no object, spending is no object, fiat currency is no object. The markets don't matter anymore because we're gonna keep it elevated, not only stocks, but corporate bonds, ETFs. Well, stocks, they probably will keep it elevated as well, the Federal Reserve. So what I'm trying to say here, if this was a great policy, there wouldn't be a poor country in the world out there. All this wealth would flow, really trickle down, and everything would be great. We wouldn't even need politicians because we could just have the central banks in charge and this buying everything and keeping everyone happy, sending them checks every month, and the world would be a paradise. So that's what I'm trying to say here. So let's look at the markets this morning. It's 8:25 a.m. London. We've got spot gold 1724.50, down a little less than $1. Range has been 1721 to 1733. Yes, frustrating, but I'm holding on to my precious metals. Precious metals is, I would say, the big trade of this whole scenario of money is no object, spending is no object, markets is no object because we can just keep them up. It's the big trade. and I'm not gonna get out of it. I'm gonna, like Jesse Livermore said, be right and sit tight. One of his sayings was that most investors are right about things. It's just that they don't hold on to that idea for that long. They're impatient. And yeah, I know gold and silver are money and they're not really investments, but in a world where the monetary system has gone haywire or mad, gold and silver become an investment. This is the time when it happens. And it happened in 1923, and it happened in all the other countries around the world that tried this experiment. And why would it be different for any other country? Why would it be different for the US? Why wouldn't it happen in the US as well? There's nothing that says it shouldn't, or in the UK, or in the euro area where they use the euro as well. So silver is at 1734. It's down about a cent. So precious metals are quite steady. The Dow future, though, is up 350 at 26,128. It has been up as much as 560. So it's come off a little bit. It's still up 1.4%. S&P 500 above 3,100 now. We were around 2930 yesterday, so it's rebounded quite a bit, of course. It's up 34 points this morning. The future, NASDAQ 100 future, 9,890, up 111. The dollar's lost a little bit of ground, but not that much. Sterling is up 0.2% at 126.26. Euro is up 0.1 at 113.35. Dollar's unchanged against the yen. Crude oil naturally has rebounded a little bit. WTI is down overnight, but it's above where it was yesterday. We're at 37.26. The 10-year yield has risen a little bit, so government bonds have dropped a little bit. We're at 0.73 of a percent. The 10-year yield, it's up 3 basis points, and I think it's up about 6 basis points from yesterday when I made my video. So there you go. When money is no object anymore, you need to think of its value. I think the Federal Reserve note, Bank of England note, all the fiat currencies, there's still a good means of payment, and they will still stay as that for a while. But I think what's at stake here and in danger is these currencies as a measure of value. I think the prices are going to be very wacky, not just financial assets, but real goods. Of course, the store of value function, that's been dead for 50 years, as the dollar has lost like 98% of its real value since Bretton Woods was abandoned in 71. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.